Hello, everyone. This is Alexander Horat. Before we begin, if you could please subscribe to the channel and leave a like on the video, that would be great. Today, we're having Jeffrey Christian. He is the founder and managing partner of CPM Group, one of the most respected precious metals research and consulting firms in the world. Hello, Jeffrey. We're really grateful to have you on the show.
Well, Alexander, thank you for inviting me.
Yeah, silver's been pushing toward the $60 level. What are the real forces driving this surge, and how much of it is tied to investment demand versus industrial and jewelry demand?
Uh, it's almost all investment demand. You know, if you look at just the last 2 weeks, silver rose $10 in 5 trading days, during the Thanksgiving holiday break. And fabricators don't come in and drive the price up $10 on a holiday week. It's really investment demand. If you look at the data, you see it's investors buying ETFs and physical metal, and it's geographically dispersed. So you got Europeans, North Americans, Asians, Indian demand has been very strong this year. Chinese demand is kicking in. It's primarily investment demand. Now, part of that investment demand is investors buying in anticipation of strong industrial demand. And there probably are some people who are overly enthusiastic as to how much silver can be and is being used. There's a lot of misinformation and disinformation in the silver market and the gold market. But the reality is that there is strong fabrication demand as well as investment demand. But it's really investment demand that drives the price.
Yeah, that makes a lot of sense. Yeah, it definitely seems like investment demand is the biggest demand. Many analysts claim there is a looming physical silver shortage. What are your thoughts about real availability and structural supply risks?
Well, it's a complex thing. First off, there are people who will tell you that we've been in these massive deficits for 5 years or whatever, and that's nonsense. What they do, those are people who market silver to investors,
Yeah.
and the way you look at any commodity, and we do all commodities, including agricultural commodities and oil and natural gas, and in any commodity market, you want to look at total supply less fabrication demand or consumption demand. You do not want to include investment demand in that balance. And you do that for several reasons. One is investment demand is radically different from industrial demand. Investment demand doesn't change the nature of the commodity. Investors buy that commodity and they hold it, whereas fabricators or industrial users or consumers will actually use, if not actually consume. Agricultural commodities and energy get consumed. Metals, by and large, get used, and they are refinable and recoverable to some extent. Uh, so you want to look at the balance between total supply and fabrication demand. You don't want to put investment demand in there. In addition to that, investment demand tends to be positively correlated with prices, where fabrication demand is negatively correlated. And fabrication demand, investment demand is primarily very secretive. So
Hmm.
what you've got are people using their estimates, dummy variables, to estimate how much silver is being bought by investors. And that's a very dangerous thing to do. And if you have a bias, and silver bulls and silver marketing people and others have a bias toward being bullish, you'll tend to overestimate how much silver is there. So you have to exclude that investment demand. And then if I'm an investor, I want to invest in commodities that have tight fundamental supplies. Their industrial users and consumers are wanting more of the commodity than is readily available. I don't want to invest in a commodity, the price of which is rising because other investors are buying it. I want to invest in a commodity the price of which is rising because it has a tight balance. So you put all that together, and what you get is my answer to you is yes and no. You know, yes, fabrication demand is rising, and there is a tightening supply demand balance. You know, you have a market whereby in which um, industrial users and fabricators tend to buy most of the silver that's readily being refined, newly refined silver coming into the market from from mines and from scrap recovery. And if you find that market, then you can be positive on it. And investors come in and they add to the buying pressure and they drive the price up. And that's the kind of market you want. You don't want a market that's being pushed higher because investors are buying it, because A, the investors can stop buying on a moment's notice, and B, they're not using or they're not fabricating that product, that silver into something that is not readily resaleable. You know,
Right.
so you look at the amount of silver in above ground inventories, and there's like 6.5 billion ounces of silver. About half of that's owned by investors, and about half of it is working inventories in the market. And the tightness comes from the fact that silver investors right now don't want to sell. The price is rising. I don't want to sell into a rising market. I want to sell into a market that has risen, that looks like it's plateauing and looks like it's vulnerable to a downward move. Yeah. Um, and so you've got a tight market, but you've got to be careful because of that role of those investors in it. So there is a tight market. Industrial demand has the capacity to rise further. It has to rise high enough to cause investors to be willing to sell. Now, over the last 2 or 3 years, 2022 to 2025, we saw investors selling. Some of those investors were people who had bought at the highs in 2011, 2012. You know, the price went from $5 in 2004 to $50 in 2011. There were people who thought it would go to 100 and they bought at 50 and they said, oh my God, the price has gone back to $10, $15. And now with the price over 28, they've been selling again. And so that kept the price down for a few years. But as the prices continue to rise since April of this year, those investors are saying, I may want to sell, but if I wait and sell tomorrow, I might get a higher price than I get today. And tomorrow comes and they say, I think I'll wait another day. And that's what's been going on since April. So the fabricators have to sort of find that level where investors will say, okay, now I'm happy to sell. And given the state of the world politically and economically, investors are very hungry for gold and silver. And our expectation is they're going to continue to be hungry to buy more silver, and they'll be reluctant sellers.
So do you think there's any possibility of silver going down back to 10, $15, or is that pretty much impossible at this point?
Yeah, there's an old joke where somebody asks God a question, and God's answer is, "Yeah, that could happen. Not in my lifetime." You know, I'm not God. I'm mortal. But silver could go back to $10 or $15. It's in we run all kinds of scenarios, and we have
Yeah.
scenarios where the price goes back to $18 or $16. They are minor scenarios with lower probabilities.
Mm.
We have silver prices rising and staying high in most of if you look at the 100% probability across our scenarios, in most of our scenarios, the price of silver stays far above $15 or $10 an ounce for the next 10 years.
Okay, that's good to know. So, how much influence do Asian buyers, particularly in India and China, now have over global silver prices compared to Western ETF flows?
Well, there's different animals, you know. And one of the things that we said when ETFs were being created was that with gold ETFs, you have different types of investors who invest in gold ETFs than invest in physical gold. In silver, when the ETFs were created, the first big surge in ETF demand investors moving metal into ETFs was actually from long-term silver holders. And it has to do with the fact that, a lot of investors in gold had physical amounts that were equivalent to shares of gold ETFs. Whereas with silver, a lot of investors had 1,000-ounce bars, and they're cumbersome. They're difficult to use. They're difficult to sell. They're difficult to store. And
Yeah.
when the ETFs came along, you had a lot of investors, core long-term silver physical investors, say, I'm going to sell my 1,000-ounce bars and buy ETFs. At the
Mm.
same time, you had them shifting from 1,000-ounce bars to coins. And you've seen this surge starting in the 80s, but accelerating over the last 25 years of investors having coins as opposed to bars and investors having silver. Now, what we've seen this year is new investors buying silver ETFs. So these are shorter term investors. They tend not to be traditional long term silver investors. They tend to be more momentum traders or investors. They see the silver price rising. They see a hostile economic and political environment. They want to buy silver. They don't want to buy physical metal. They don't even know how to buy physical metal in many cases, but they can go online to their brokerage account and buy ETFs. So we've seen a surge this year in new silver investors who are really shorter term momentum investors. They see the price rising, they're going to buy. And you saw this over the last few months, big increases in silver invest ETF buying, and then all of a sudden big decreases, and then big increases. I mean, just in the last 3 months, we've seen this surge, then a large sale, tens of millions of ounces, and then tens of millions of ounces of new purchases. Those are shorter term momentum people trying to take advantage of short term price moves. But there's this stable core of, I don't know if it's 700 or 800 or 900 million ounces of long term investors who are very happy right now to have their metal held by ETFs.
Yeah, that makes sense. So, de-dollarization and BRICS discussions are accelerating globally. How much of an impact do you think this shift is having on investor demand for silver, and is it contributing to the push towards higher prices?
What were the variables that you mentioned that are?
De-dollarization and BRICS discussions are accelerating globally.
Oh, yeah, yeah. Very little. First off, the idea of de-dollarization is largely inaccurate. If you look, more dollars are held by more people around the world now than ever before. And what you see is, and what I've seen my entire career, and I started studying commodities in university in 1975, um, there is a desire to diversify one's assets away from the dollar, but the practicality of that is extremely limited. So if you look at, say, overseas holdings of US Treasury bills, they have been rising 10 to 15% per annum for the last 3 years. They are at record levels, like $10 trillion of treasuries held overseas. Now, Russia is a particular set aside. But if you look at China and other countries, they haven't necessarily been selling the dollar or selling treasuries.
Mm.
China, the People's Bank of China, did sell the dollars over the last couple of years, but you have to understand the nature of what they were doing. They have had a very weak economy, and they have needed to use monetary reserves to help support the economy and keep it out of a recession.
Yeah.
Most of their monetary reserves are in US dollars. Probably more than 60% of their monetary reserves are in US dollars. So as the People's Bank of China says, let's spend $1 trillion worth of monetary reserves to support the economy, by definition, they're going to be using the majority of what they're selling to generate money to support the economy is going to be US dollars. It's not that they're saying we want to dump the US dollar. It's that they're saying, thank God we have all these US dollars that we've built up over the last 30, 40 years in our monetary reserves, expressly so that we would have them in a time of economic problems such as is now. So there's not a lot of de-dollarization going on. And in fact, right now, you've got some people reconsidering the dollar. There's been this view that we've held and others have held, and it's still our long-term view that on a long-term basis, you'll move away from the dollar as the de facto currency, reserve currency. But there is a very good argument, which is being manifested in actual activity now this year, that the dollar is a better place to be than other currencies because the US government, for all of its warts and all of its problems and all of its debt, has a better credit rating than most other governments and most other private borrowers. So when you're sitting there on this record amount of money and a record portion of it in cash, and you're saying, where am I going to invest this money? The US dollar and US treasuries is the most secure debt instrument you can find. So there's actually been something of a re-dollarization, if you will, on that. Now, turning to the BRICS, you have to understand the idea of a BRICS currency, let alone a gold-backed BRICS currency, resides in the Kremlin.
Mhm.
China doesn't want it. China has a gold policy that says the gold in China stays in China.
Yeah.
If we want to buy your products and import them, we will pay for them with dollars and other currencies, not with gold. India has a similar policy, and it doesn't have all that much gold. So it's not in a position to say, hey, let's settle our international trade with gold the way we did prior to 1971. South Africa, Brazil, the two other BRICS, they don't have a lot of gold. They're not interested in it. They are starved for foreign direct investment. Russia, Putin and the Kremlin say, we don't like the dollar. The US government doesn't like us, and we don't like their dollars. And we try to minimize the amount of our monetary reserves we have in dollars. We would love to see, we buy gold whenever we have extra money. And we would like to see a BRICS currency and a BRICS exchange system, et cetera, et cetera. If you go back to the BRICS meeting in Russia in 2024, Putin gave a speech and he held up a mock-up of a BRICS currency. He said, the Kremlin, we drafted this. This is what a BRICS currency could look like. And it could be backed by gold. The head of the Russian central bank said, we have no interest in a BRICS currency. A BRICS currency would not work, and a currency backed by gold would not work. We do not want to be in a situation where we have a gold-backed ruble, where people can bring the rubles to us and say, here are my rubles, give me your gold. That's what happened under the Bretton Woods gold dollar system, was we had a massive run on US Treasury gold holdings because the dollar was backed by gold. And we lost enormous amounts of gold reserves until they closed the gold exchange window. So you've got Putin and the Kremlin, the political leaders of Russia, saying, let's have a BRICS currency. You've got the Russian central bank and the other four governments in the BRICS saying, we have no interest in this.
Mm.
But you do have a tremendous number of promoters of gold and true believers who say, oh, yeah, that's the way it's going to have to be.
Yeah, yeah, definitely. So do you think Russia's just doing these threats just to scare the West and it really has no intention of, if their central bank, I guess, has no intention of doing it, I guess they really don't have any intention of doing it, right?
They don't have the mechanics to do it.
Yeah.
Yeah. Most of their reserves have been frozen since they attacked Ukraine. Most of their foreign exchange holdings have been frozen. Even countries that were friendly with them said, look, we'd love to continue to trade with you, but the reality is that if we do, we would be subject to sanctions too. So sorry, we're holding your rubles for now. Uh, and so most of their reserves right now are in gold. And as a result, if you look at the Russian central bank's gold transactions, one month they're sellers, the next month they're buyers. They've been using gold to support their government. The government used to have the majority of its revenues coming from oil and gas and other exports. Those exports have fallen sharply. So they're starved for cash just on a government operating basis. And then they have a war to prosecute, which is further bankrupting the government. Russia doesn't really have the mechanics or the capacity in and of itself to do anything in terms of moving away from the dollar on a global basis. It can move away from the dollar as it has for the last quarter century since Putin came in, or more importantly, since Cheney came in the United States and started this very, very virile anti-Russian policies. Um, Russia just does, Russia has had a non-dollar or anti-dollar policies and procedures for 25 years, and they're going to continue to be that way.
Yeah, I agree that Russia definitely the mechanics for that would be difficult. So I've been hearing this rumor, I'm not sure if you heard it, but they were saying that Morgan is moving to Singapore. Is there any truth to that rumor or is it just a false rumor?
It's a false rumor.
Okay. That's good to know. So if silver continues breaking higher, potentially beyond $60, what would be the key macro investment catalyst pushing it into a new price regime?
Well, I think what's going on right now with increasing economic problems and increasing political pressures, both domestic pressures in the United States and elsewhere, but also international pressures. I think this combination of hostile economic and hostile political conditions is what has been driving gold and silver prices higher, and it's what we expect them to continue. We expect them to get worse in the first half of next year, at least, possibly into 2027, possibly even longer. And in that kind of environment, we expect investors to continue to drive and buy more gold and silver and drive the prices higher. So we're looking at what we're seeing now and we're saying this is uh, bad for the world, good for gold and silver.
Yeah, it seems like gold and silver go up whenever there's a disaster, there's bad things happening to the world economy. So I definitely agree with you that it's bad for the world, but good for gold and silver. I think that statement rings true. So I would just like to take the time to share my screen to show Jeffrey's site, the CPM Group. So
Hmm.
I'm subscribed to him on YouTube. He makes some really good videos each week and definitely good content. So I would definitely like to tell everyone to please subscribe to his channel. It's definitely really important information he's giving out to everybody. And you can also check out his website, thecpmgroup.com. Is there an email mailing list that people can get on for the website, Jeffrey?
I'm not sure if I think there is a place at the website where you can sign up to be on our email, one or more distribution lists. What you're looking there is, this is Precious Metals in a Rising Storm, a report we've done for Monex Precious Metals, but we also have this online seminar coming up December 14th, which will be with Silvercorp. And you can go to our website and register to participate and plug into that webinar.
That would definitely be great to be able to get in that webinar. I think that's definitely a great idea. So please check out his website, cpmgroup.com, and then you can plug into his webinar that he's going to be having. And I would just like to thank you, Jeffrey, for coming on the show and providing us all with this great insight and information that you have. And I definitely would like to have you on the show again soon. Maybe we could have you on a panel with some other guests, and we could do something like that in the future.
We could try that. Yeah, sure. I'm always open to good discussions with qualified people. It's great to have a fair debate. Yeah.
It's always fun to do that, and I just thank you again. And I would just like to thank all the viewers for watching this video. Please share it with all your friends. We need to get this out to as many people as possible. And please subscribe and like the video and leave a comment if you have a question for Jeffrey or any comment on the video itself. And just thanks again for everyone who's watching. I hope you all have a good day.